In our tour of key performance indicators, we are going to look at financial KPIs today. Welcome to this video on analyzing business data with T SQL. My name is Kevin Fiesel, and I'm the proprietor of Galaxy Services LLC, a consulting firm which specializes in work all across the data platform space, especially SQL Server. In the prior video, we learned a bit about key performance indicators. Specifically, we learned that key performance indicators are numeric measurements tied to an organizational goal with some target and grain. If that definition seems confusing, well, I go into detail on the definition in the prior video, so I'm not going to do that here. Instead, go watch the prior video and then come back. In this video, we are going to look at 3 financial key performance indicators. I am going to start with these because pretty much any business is going to care about their finances. After all, it's hard to be a going concern if you're not making any money. As a quick heads up, although KPIs typically have targets, we're not going to specify them in this series. The reason for this is, typically you'll define KPI targets in the visualization tool or when you bring the data into a warehouse. Before we go to the demo, I'd like to see you in the classroom for just a moment. Great. As I mentioned in the first video, I am targeting this series at 2 different groups of people. The primary target of the first video is developers and data platform professionals who were maybe unaware of some of the concepts behind key performance indicators. For this video, I'm also bringing in the people who aren't incredibly familiar with SQL as a language, but I do have a baseline of what I expect you to know. First up, I am expecting that you are familiar with the key clauses in T SQL. They are, in order of appearance, select. The select clause specifies what information you would like to retrieve. Top. Within the select clause, we can also limit the number of records we return by using top and then specifying a certain number, like top 15. Distinct. Within the select clause, the distinct clause specifies that we want to ignore duplicate rows. For a row to be a duplicate of another, all of the columns need to match exactly. From. The from clause serves as our logical starting point for the query. It is a table or a table-like construct if you want to get a bit pedantic. And generally, this table or table-like construct will contain some or all of the data we need in our query. Join. The join clause is how we connect tables or table-like constructs together. I am also expecting that you are familiar with the types of joins, though there are 3 that will be important in this series. The first is inner join, where we expect a match between both tables, which typically we refer to these tables left and right for conceptual purposes. A left outer join indicates that we want all of the records from that left table, regardless of whether they join to records on the right side. A cross join creates a Cartesian product. In other words, we want one result per combination of left and right rows. If you are not 100% comfortable with the idea here, we will see some examples in the series, but I would recommend watching a refresher video or trying it out on your own first. Where. The where clause serves as a filter for rows. In here, I can specify that I only want to return rows meeting certain criteria. Group by. This is our way of aggregating columns. If I group by a column, I am taking potentially many records and smooshing them down into one record. Having. The having clause is our way of filtering aggregated rows. In other words, the where clause works prior to aggregation and having works after aggregation. Order by. The order by clause tells SQL Server how we would like to see our results, specifically the ordering in which we want to see our results. I also expect you to be familiar with the concepts of aggregation and how having an aggregation function like sum can affect non-aggregated columns. Aside from that, we are going to learn a lot in this series as we pivot from classroom analysis to diving into SQL queries. So let's go to the demo and get to work. Here we are in Azure Data Studio, looking at the first of 3 scripts that we will review in this video. To make it easier for you to follow along, I am going to focus on the Wide World Importers database, as it is freely available and it's a Microsoft sample database. It also includes a fair amount of the type of retail information that we would need to generate our KPIs. Wide World Importers is not an example of a billing system or a financial management system, but it will have enough for us to work with. It's also very clearly not a data warehouse, making some of the queries we will want to write a bit more challenging. And for the purposes of showing you different analytic query writing techniques, that's a good thing. Anyhow, the first KPI we will look at is revenue. That is, how much money did the company take in? I've already talked about my assumptions of how much you know about querying data using T SQL, so I won't belabor that point here. Instead, let's write a query. I'm going to start from the order lines table in the sales schema. This table is part of a common database pattern. We have orders, and each order contains one or more order lines. The order represents a discrete order event. Meanwhile, the order line tells us about an individual purchase within the context of that broader order. If I look at the top 100 rows in the order lines table, we can see that each order line has an associated order as well as a stock item ID. The stock item ID represents the product, and we see some duplication of the product description here. There's a quantity indicating how many of this item the buyer wants, as well as a unit price per item. We can see a tax rate here as well, which may come into play in a later video, but we will ignore it for today. Now, for our first calculated measure, let's multiply unit price by quantity, and this gives us revenue. Or at least it does in Wide World Importers. One important thing to mention is that just because this is how you calculate revenue in this system doesn't mean it'll be exactly the same in every system. Also, if we are talking about accounting systems, there may be specific rules about when you can recognize revenue, as well as complications around discounts and special rates. But we're going to ignore those complications today. Our calculation of revenue is a simple aggregation, but we probably want to do something maybe a little more interesting with it. For example, what about total revenue per customer? Well, that's as simple as adding the customer ID to the mix, which we can get from the orders table. But because we have an aggregation function here in the form of sum, and because we have a non-aggregated column in customer ID, we need to include a group by clause and include all of the non-aggregated columns in there. Finally, I'll sort by revenue descending. As I execute this query, it shows us all of the customer IDs, and we can see that, in my dataset, customer 401 has spent the most money buying our stuff. Next, maybe we're interested in our small fry customers, those who've spent less than $150,000 in our system. This is where we can add the halving clause. Recall that halving is where we filter after aggregation. So this is asking for all aggregated records, that is, data at the grain of customer, whose revenue figure is under $150,000. Running this, I can see 13 customers in my dataset. That's our first KPI, revenue. But revenue is only one side of a critical calculation. The other side is cost. We need to know how much it costs to sell these products to our customers. Okay, we're going to need to escape the demo and do a little bit of real talk for a moment. I am not a certified public accountant. My wife is, but it turns out that I can't simply use her expertise in some type of marital transitive property. It just doesn't work that way, as the IRS has repeatedly and pointedly informed me. Throughout this series, I am going to use terms that have meaning in the accounting world, but I am not going to stick to the explicit definitions of those terms in accounting terms. For example, when we talk about cost, there are many types of cost. The easiest form is cost of goods sold, which is how much money you spent on the products themselves. But then we have other sorts of costs, such as how much are you paying employees? It's the cost of utilities like heat, electricity, and water in your building, the cost of renting space in a building, and all kinds of other expenses that go into the mix. We are going to keep it deliberately simple. I know there is more complexity in these calculations, but this is not a video on how to maintain a ledger or draw up a balance sheet. It is a video on SQL techniques linked in with useful metrics that people on the business side will hopefully find interesting. Okay, real talk done. Let's go back to the demo. The form of cost we are going to worry about in this video is cost of goods sold. Because Wide World Importers is a reseller of products rather than a direct manufacturer, our cost of goods sold is a measure of how much money we paid the manufacturers for their product. And it turns out that this database doesn't have a great way of tracking this information. So let's back into it. First, I'm going to track how much quantity we've ordered on a per stock item basis. This aggregation is very similar to how we calculated revenue before, and we can see that for each stock item ID, we have a total amount of quantity. Next, I'm going to wrap this in something called a common table expression. Common table expressions are a helpful way of logically isolating part of a query so that we can use the results further down in the query. As an important note, SQL Server does not materialize common table expressions, meaning that the database engine does not run the contents of each common table expression in turn and then store them in some sort of temporary storage location. This fact has some performance ramifications that we are not going to worry about today. Instead, what I want to focus on is that I am calling this common table expression orders. The construct requires a with clause, followed by a name, and then the as keyword. Then we wrap the query in parentheses. Outside of the parentheses, we can refer to this common table expression in another query as the virtual table orders. Orders is not technically a table, but it behaves like one in queries, so we call it a virtual table. If I run this command, we can see that the results are exactly the same as before I put it in a common table expression. But what I can do is this. I am able to act on each stock item and its quantity without worrying about how I need to aggregate the results later. Let me show you an example of this. Now I have my orders CTE, and then in the main query, I start with the stock items table and then join to the stock item holdings. From there, I can join to the orders table on stock item ID. Because I have already aggregated my quantities earlier, and because there's one record per stock item in the stock items and stock item holdings tables, I don't need to aggregate them again here. We have our cost price, that is how much we pay per unit of the item, multiplied by the total quantity we've sold, and this gives us a measurement of cost. We can see that we have spent a whole lot of money on t-shirts. In this particular query, we did not necessarily need the common table expression, but it will be useful in the next query. Now, I don't want to know my cost just at the product level, but also I'd like to know my total cost of goods sold. We can start off with an orders CTE just like before. We can join our orders to stock items and stock item holdings like we did in the prior query. But because I've already aggregated order line quantities in the common table expression, I can aggregate again without any columns and get the total cost, which is a lot. And this is where I'll show you one bonus tip, and that is how to format a value in T SQL. Granted, this is something you would typically do in a visualization tool rather than in the SQL query itself, but because we're just looking at numbers in Azure Data Studio or SQL Server Management Studio, I'm going to format them so that it's easier for me to read. The format function showed up in SQL Server 2012, and it allows you to format data in a particular way. The format string I'm using states that I would like to start with a $sign, indicating that this is in US dollars. From here, I will have numbers with a thousands separator, and in the US, we use commas as a thousands separator. In other countries, you may see decimal points as a thousands separator. I'm also going to include the decimal point as the marker between dollars and cents as well. When I run this, it's a lot easier to see that Wide World Importers has spent more than $780 million on costs of goods sold. And this is going to take me to my third KPI, profit. We are going to define profit in the simplest of terms, revenue minus costs of goods sold. Once again, refer back to the prior note about how accounting systems include a whole bunch of other pieces to calculate actual profits, but we aren't dealing with an accounting system, so we're fine. In our first query, I'm going to start with something pretty similar to what we saw for cost, except that in the common table expression, I'll also bring in my revenue calculation that we saw before. Then in my main expression, I can sum up revenue to give us total revenue, costs to give us total cost, and then subtract the two to give us profit. Because there are no non-aggregated columns in this query, I do not need a group by clause. Also, the two separate sum functions in profit means that I am summing up all revenue and then subtracting the summation of all cost rather than on a per item basis. As we learned in math class over the years, this should not actually matter for the purposes of addition and subtraction. One other note is that I could wrap these calls with format in order to make formatting the results easier, but I'll skip that unless it's really valuable to do so. In this case, we can see revenues of $1.5 billion and costs of $781 million, leaving us a profit of $773 million. Not bad work if you can get it. The next question we might want to ask is, how can we get the profitability of specific products? When it comes to working with key performance indicators, we might be interested in the bottom line, but oftentimes business users will want to slice the data by various dimensions. Slicing by stock item name is pretty simple. We add it to the select statement. Then, because we have aggregation functions and the stock item name is a non-aggregated column, we need to include it in the group by clause. Running this, we can see that Wide World Importers has made most of its money on bubble wrap. Apparently, bubble wrap is big business. For the next question, what about if we want to see per item revenue, cost, and profit, as well as the total values for revenue, cost, and profit on each line? This is useful as a rough indicator of how much pull a single product has. In SQL, we have this notion of window functions. I'll probably put together a series on window functions in the future, but to give you a really brief overview of the idea, a window function's purpose is to look at a specific subset of data, that is, a window. In this next query, we start with the same common table expression, but introduce the window functions. You can tell something is a window function because we start with a function name like sum, and then follow it with an over clause. In these examples, the over clause is empty, indicating that our window will be looking at the entire data set. Thus, if we want to look at the sum of revenue over the entire data set, we'll get total revenue. What's particularly interesting about these functions as I execute this script is that window functions are not aggregate functions. In other words, we do not have a group by clause and do not condense the number of records we return to the caller. I have 227 products, and I see the same value for revenue, cost, and profit on each one. This is very useful in giving us a top-line measure, in addition to detailed numbers, in the same query. But this only answers half the question. I want to know not only what the totals are, but also the specific values. Well, let's bring back in the original sum operations without window functions and combine them with the window functions. When I try to run this query, I get an error that orders.revenue is invalid in the select list because it is not contained in either an aggregate function or the group by clause. This is further proof that our window functions are not aggregate functions. Now, there are two answers that the error message suggests. The first answer is to switch the window function to an aggregate function, but that's not something I can do, as then I wouldn't have a window function any longer. The second is to add revenue to the group by clause, but that's also a bad idea because now I would get one record for each unique combination of stock item name and revenue value. That's definitely not what I'm looking for. So what's the actual solution? Well, the primary insight I want to deliver here is that revenue, cost, and profit are additive. Going back to the prior video, this means that I can sum them up along any set of dimensions, and that summation is still valid. Furthermore, I can also have multiple common table expressions in the same query. Here, my first common table expression is orders, which we've seen a few times already. But now the syntax changes ever so slightly. I can add a comma after the first CTE and introduce a new common table expression. I'm calling this one metrics, and it gives me the revenue, cost, and profit on a per item basis. We have the stock item name in the select columns, so we will need to include it in the group by clause as well. Finally, in the main query, we show revenue, cost, and profit, as well as a window function summing revenue, cost, and profit over all records. If I run this query, I get exactly what I'm asking for, the revenue, cost, and profit for each item, followed by the total revenue, total cost, and total profit. And there you have it. We have covered 3 important business measurements that typically turn into key performance indicators: revenue, cost, and profit. Along the way, I introduced common table expressions and window functions as analytic capabilities in T SQL, as well as using the format function to help us visualize numeric results. In the next video, we will talk about a class of business metrics that relate to customer counts. We'll have links and show notes in the description below. And until we see each other in the next video, take care.